Let's talk today about 7 high growth stocks that are poised to be massive winners, in my opinion, over the long term. Now, the exciting part about these 7 picks is that each one of them is poised to see at least a double-digit growth in their revenues in the following year. So there's a lot of upside and a lot of optimism that investors are expecting with these stocks. Now, the way I chose these stocks was to kind of maximize my potential, but still minimize the amount of risk that I would be taking on. I don't want to go out there and buy these penny stocks and hope to win it big with those. Those typically don't end up working. But what I did do was find some good businesses that have a lot of upside, but are trading at some pretty reasonable valuations today. I think that some of these stocks have the potential to easily double your money, in some cases triple, quadruple, or even 10x your investment over the long term. So why did I choose these 7 specific stocks? Well, I think that these stocks are actually what I would call best of breed. They're pretty much the best, if not one of the best of what they do. They provide a valuable service, a valuable product in some cases, and the future is looking extremely bright for them. And if we do somehow see another stock market crash, these stocks, because they're high growth, could get hit harder than other stocks, and that could be an even better buying opportunity, guys. A lot of excitement if that does happen, but hey, fingers crossed for that. Now, I'm gonna say this, these are hand-picked stocks from my personal watch list that I monitor pretty much on a daily basis. But taking a step further, if you are interested in when I actually make a buy in one of these stocks, or want to check out my portfolio to see what other stocks I own, consider joining our VIP group. I will leave a link in the description down below if you're interested. So anyways, drop a huge like, share this video with a friend, but either way, thank you for your support, and now let's kick off this top 7 list. So Axiex is our first stock, and you can see over the last 1 year, it has had a ton of ups and downs in the stock price, making this an extremely volatile name. But I'll be honest, volatility goes hand in hand with all 7 of these stocks today, so you have to be ready for that. You have to expect to be down in your position at some point if volatility hits, and that's just the reality of the situation. So do your own due diligence, understand these businesses that I'm talking about today in depth, and then you'll feel confident whether the stock is up, down, sideways. You'll be able to add to your position with high conviction. Axiex has had modest growth this year, expected to pull in just around 13% growth, but next year is where we see this shine with over 25% growth expected year over year, which is absolutely monstrous for this business. Axiex is a data analytics company which does things a bit differently because they enable businesses to automate processes, embed intelligent decisioning, and power their employees to deliver faster, better business outcomes, resulting in a more efficient and ultimately higher profit business. Now, we all know the data space is growing rapidly, and I am long-term very bullish on this sector. I think we're going to see some huge winners in the space over the next 10 years, and Axiex could definitely be one of those stocks that, doubles, triples an investment in no time at all. Axiex, guys, sits at a $9 billion market cap today, which is tiny considering the market potential for this company. So there's a lot of opportunity here for this business to multiply many times over the coming years. Stock number 2, Beyond Meat. This is one of my favorite growth stocks today because I believe this is a company that's caught up in a few exciting trends. When I look at the future of the world and I look at where things are moving, especially with younger generations, sustainability is important, eating healthy is important, moving away from meat or reducing meat consumption is also important. Many people think that this plant-based diet thing is a fad, but I think it's actually a long-term trend. When you see massive companies like McDonald's, KFC, Starbucks implementing plant-based options into their menus, you know that this is a serious trend and things are changing. So you either hop on for the ride, enjoy the gains, or you sit aside, be skeptical, and let that ship pass you by. What I also love about Beyond Meat specifically versus the others in this space is that when consumers, an average person on the street, thinks about a plant-based food product, a burger, a sausage, whatever, they think Beyond Meat, and that is powerful. I'll let you know a little secret. I think that the brand Beyond Meat in itself will be worth more than what Beyond Meat's market cap is today. So we'll wait and see if that happens, but that's just my prediction over the long term. Now, the numbers that Beyond is expected to see this year and next supports my outlook and theory. 61% growth is expected this year with over 55% next year, which is absolutely astronomical. And as they continue expanding globally and expanding their partnerships with retailers and restaurants, I think this number will remain fairly high for quite a while. Beyond hasn't been public all that long in the market, and when it first debuted, it had a huge hype rally, which has since cooled off and is now trending at much more attractive prices. Even today, we are still well off the highs, but I do believe we break past those levels in the near future. Today, Beyond is at a $10 billion valuation, and I made a video not too long ago on how I believe this can be a $50 billion company in the future, providing multiple returns on an investment. And like I said, I think that the brand itself will be a huge part of this business, even if their product may not taste as good as the competition, even if their product is, relatively healthy compared to the competition. I think that they can actually win here on their brand alone. Education is important, and that's where 2U comes in, delivering online education to the masses. In times like we are in today, remote learning experience is the way to go. And this just isn't a short-term trend again, in my opinion. I think online learning is something that will be more and more adopted as time goes on, because the current situation we're in has got people thinking, hey, we don't need to send our kids to school and pay for all that education when they could just learn the same stuff online and get the same accreditations online. Now, the growth here is strong, but it is kind of interesting here. So this year, expected to see around 30%. Next year, we expect to slow down at around 17%. So yeah, while there is a slowdown in growth expected, there's still a lot of strengths this business has and is showing to continue growing larger over time. This stock has had a very rough time in recent years because of some fundamental issues investors saw in the company. But since its lows back in mid-2019, it has started trending higher, but still sits well off of its highs. This is a very small company, a $2.6 billion market cap, but it does present itself to be a 10x stock over the next few years if the trend for online education continues like I think it will. This is a more risky stock or more risky business to be invested in because it is a smaller company and it is kind of fighting an uphill battle here, but there is a huge market for it to go after. And this is kind of where risk reward comes into play. 2U, I wouldn't necessarily have this as a large position in my portfolio, but if the business appeals to you, you actually do believe in their vision, and you believe this online learning thing is actually going to be a long-term trend, and long-term people are actually going to resort to learning online, then this could easily be a business that's much larger than it is today. Cloudflare, I don't believe we've discussed this one on the channel before, but again, this is in a big growing industry of internet security. Their motto is that they are built for anything connected to the internet, and that's powerful because it gives companies peace of mind when moving to the cloud. They have many large, well-known customers like Shopify, IBM, and DoorDash, name a few, so this is very much a relevant business for the world today. But we're here in this video for growth, so what growth do they have to offer? Extremely strong growth is expected in Cloudflare in the next few years at minimum, and this year is projected to close in at 41% and next year at over 31%. These are not numbers that many companies can post and boast about, so it's clear that they are doing something right and customers do find value in their service. This is a fairly new company, only public for just about a year so far, but in recent months it's awoken from its slumber and has been dominating. This has pushed up close to a $17 billion valuation today, which I'll admit is a bit lofty considering their revenues and metrics today, but investors are betting big that they keep growing, keep expanding, and this will result in huge profits in the future. Internet security is important and it's huge, and as we continue with the world we're in right now, it's just shown companies how important it is to protect their data and just protect their organization. As more and more companies adopt more and more of their services and products online, the need for a business like Cloudflare is definitely prevalent, and that is what provides such an exciting opportunity in this stock. So I love the name of this one, Splunk, and this is another exciting company in the data sector. Now, I already touched on the growth potential for this sector, so I won't bore you again, but Splunk offers businesses a platform for turning their data into doing. Now, while growth this year for Splunk isn't all that great due to their customers not spending as much, next year we expect this company to go back on track with a solid 25% growth year. This in turn will bring in nearly $3 billion in revenue for the business, which competes with a well-known IPO, Palantir, in some some regards, so they are definitely a strong force in this industry. Splunk, unlike most of the other stocks on this list, has been around much longer and has a proven track record of consistent growth despite random spikes of volatility it's seen in its past, and I would say this name probably offers the most stability for a high growth name on this list. But because of this relative safety, Splunk trades at a much higher valuation, $33.6 billion to be exact, and this doesn't mean that we can't see more upside in the stock, because I do believe Splunk can become a $100 billion company over time, but it does mean that the upside here compared to some of the other smaller caps is more limited, and that's just the reality of the situation. But hey, if you're looking for a high growth name that still provides good, strong stability with strong fundamentals, Splunk is definitely one to consider. Yet another software company makes the list, get the theme, but this time it's a database company. More specifically, the database for modern applications. MongoDB has helped many large organizations with their database productivity, including Google, Adobe, and SAP. So although this may be a company you've never really heard of before, it's a well-respected name in the enterprise world. MongoDB is a great company, and the service that they offer seems to be loved by their customers, and I personally would not be surprised to see one of these large tech giants actually come up and possibly try to scoop up MongoDB here in the next few years. Databases, working with databases, viewing databases, it's always been kind of a sticky point for developers, and this is something that MongoDB wants to solve, and I think that they've done an incredible job so far, which is why a lot of companies probably have their eye on MongoDB to purchase them outright and bring them as part of their own organization. Now, growth for this company is solid, 31% this year and close to 28% next year. So this shows the strong momentum is expected to continue, and the demand for their product is stronger than ever. Investors have definitely taken notice of this stock in the last couple of years, as it has consistently trended higher with very few opportunities to buy at a discount. Despite this, we're sitting at a $14 billion valuation, which is a premium valuation for this company, but still provides a ton of upside based on their service and potential market they cater to. And not to mention, if a large tech name does want to buy them up, they'll definitely have to pay a premium valuation for this company. It's definitely a very interesting and exciting company, and because of what they do, they can pretty much appeal to virtually any business out there, which makes their market potential massive. And I think investors have started to realize that, because the price of the stock is definitely at a high valuation, but that does not mean that this company can't keep executing, can't keep winning, and can't keep growing over the long term. So how about this? A foreign and financial stock made the list here, Stoneco, which is a fintech company in Brazil. It's funny because you'll often hear this company being referred to as the Square of Brazil or the Square of South America, and if that's true, the potential is massive because Square has exploded in valuation recently. Growth this year for Stoneco is expected to be just shy of 15%, but next year is expected to explode at over 41%, which is absolutely amazing year-over-year growth expected. Now, while it looks like the stock has already priced in big growth, we're not too much higher off the all-time highs of the chart, because this is still a fairly new stock to the market and is also a foreign company, so there could be a lot of volatility in coming years, which could present a lot of upside but with elevated risk. Today's market cap is around $17.25 billion, and this is not too bad of a valuation considering the growth expected for this fintech company, at least from a very high level. And if we compare it to Square, which seems to be the common thing to do here, everyone wants to compare this company to Square. Square today is at a $75 billion valuation, so if Stoneco can grow like Square has, the market is huge for them to capture. Now, I just want to thank you for sticking around to the end of this video. I truly do appreciate it, and I want you to let me know in the comments down below which of these 7 stocks you would personally consider buying in your portfolio. Honestly, all these companies are very interesting, but I'm leaning more towards MongoDB or Splunk. Those two still have my attention, so we'll wait and see. Maybe I'll do a dedicated video on those companies if that's something you guys want. Either way, guys, thank you so much for watching. Don't forget to invest positively. I'll see you in the next one. Peace.